Good morning. All right. I think it's been kind of a rough week as far as the markets go. It's been pretty rough. Well, rough, because it hasn't had a directional move. It's been back and forth, back and forth. And it's kind of had us at times day to day. Okay, it's ready to go up. No, it's ready to go down. Now it's ready to go up. No, oh, wait, I think it's ready to go down. And some pretty wild kind of moves, especially what happened yesterday as prices intraday reached some support and then just catapulted. And I'm just talking from small time frames, like a 5 minute chart, but I mean, just ripped, and one bar to the upside and then stalled and back down again. So it's been a kind of wild. Anyway, so one of the things that thinking about this week and talked about early in the week, as we came into the week, we're looking at this wide range bar, and then it was followed by the next bar last Friday, and so I was like, all right, had nice gap reversal momentum. It did travel a bit of a distance, nonetheless. It should come up into this area where there's price resistance and a 200 MA subjective, okay, but it's lined up with some prices and, give or take in this area. And between 440 and 445, there was some relatively large open interest in calls up there. And so, over the weekend, I said, okay, that's a good target area for prices to roll back over. And the ideal scenario would have been just keep going on Monday and Tuesday, and maybe by Wednesday it starts to make the turnover. And well, plans don't always work out the way we would like them to. And that's just the way sometimes they do. But nonetheless, here we are, Friday, and finally at the destination that was anticipated. And so as it got up in there, it then came back down toward the end of the day. Yeah, I haven't updated that, McGraw. I'm just looking over the weekend. That was, McGraw's telling me a lot of calls were closed out, so we can see that in the open interest screen. And that's one of the advantages of the service you use to just go and look at that in a glance of an eye versus like myself, I do it the way, the harder way, I guess, of relatively hard, just SPY, SPX, Qs, whatever. Go and look, and that takes a few minutes to go and look at those levels. Nonetheless, yeah, paper, pencil, right? Just look at the quote screens and eyeball it. Where's the big levels and write them down. So up in here, based on that high open interest in calls and the pattern and what was to the left and the moving averages, it was a confluence of multiple things that said, hey, if it hits there and I can get a reversal bar, that should be a good level for shorting. Sell call spreads, bearish call spreads, depending on the pattern, bearish debit spreads, whatever, shorting stocks, ETFs. So now we've got this pattern, which is, let's call it less than desirable, of this congestion area that now it moves up into there yesterday and then turns back down again. So this is still the resistance area. It's used up a lot of energy going sideways here and recovering. So we still don't have a definitive turn, but prices here are down around 431. And remember, 430 as we came into the beginning of the week was the level that it needed to hold. That was the big open interest in put options. And, it dipped down there for a few moments. And I thought, okay, here we go, down into the hole, the void. Nope. Back up to the destination. And Yeah, back to the scene of the crime. Like that. So here we are up here and making the turn, and we know where things are at here. So 431 markets went down last night. And as I move my cursor down there where they are, you can see now it's all the way down here on the freaking support. So, it's going to gap down there onto this support level, which basically puts us in no man's land again, because now it's sitting on support. So what do I do? Do I wait for some bullish pattern to go long and back to the top of the trading range where maybe this forms, a head and shoulders kind of top? And so looking at different areas, saying, okay, where would I like to short this? Well, if it's down here, it's either has to come up here because there's nothing to the left and then roll over again, give or take, or it goes sideways down here for a half hour, which now, and I'll be looking at what financials are doing and the Russell and so on, and the Qs and who's showing relative strength and weakness. But if it cannot go up there and it goes a half hour and starts to break, it could be a little tricky, but down it's just as the way we look at bullish price action, sideways at resistance, which I explained yesterday with the futures. We'll take a look when we get to that. They went sideways and it broke out. And you remember yesterday's commentary, I said, there were some things going on here. And I said, there's some fly in the ointment with this bullish open here. Lo and behold, it gapped up and slowly began to crap out and, went down and wild up. It's really a pretty crazy day. Anyway, so, again, it's on support here, so you can't get aggressively bearish. It does have a bit of a void above. We'll get to the futures and so on. That being said, SPX. Well, let me look at the futures first. So here you have a more definitive, obvious turn, and you can see that it's on support, but we've got a breakout failure. There's the topping tail where it went up. However, we've got, this trading range. And it's a disgusting type of trading range. Just looking here, sellers are getting pretty aggressive. Look, nice little pop, bam. Nice little pop, right back down again. But buyers will show up here. So it's not like there's a big void. Anyway, down below here, it's going to open up the door. It should open up the door to moving lower. It's Friday. We'll see. Do we get a topping tail on the weekly by the end of the week? Is it above the open, below the open, so on and so forth? What does everything else do? Right? There's been kind of a crazy time with uncertainties about Russia, so on and so forth. Right? Now, when the hell are these guys that have a 40-mile caravan of tanks going to do something? I've been hearing that for 3 days. They got a 40-mile thing of tanks. What are they going to do? Right? Let's get it on. If they're really going to do something, there's, this country, other countries with one flat tire, George, right? I mean, what are they going to do? Are they going to send over some freaking missiles? I was telling my wife the other day, why don't they ship some rockets over there and let them start shooting off some rockets at Moscow and blow up their big, pretty palace or something? Get it on and do something if you're going to. And like a political show, who the hell knows if it's real or whether they're, all these politicians were short the Russian market and racking it in. All right, so top bottom of the range, let's go to SPX. And since it's bearish price action, I believe we have no-brainer situation here. How low can we go? And it becomes tempting in these markets that have just been whipping back and forth. Like, let me get a little closer to the danger zone there. That seems it's not going down there. So 4,100 is a no-brainer. Right? 40 cents by 55 cents. No brainer. Right? If it traveled from here to there and broke that low, I mean, you don't want to be there, of course, but Look, it ain't going down there today. It did not. And if it was to get there, it's going to bounce. And besides that, you've got, well, 4,300 is right where it'll start to break. And again, just because of open interest, 4,250, 4,200, 4,100 is going to be huge. So you've got, while you don't have price protection, meaning because there's a void here, there's plenty of other protection. And then you've got, the people with fib lines and trader pivot lines that'll step up and get run over along the way because there's nothing to the left. Nonetheless, zero DTA, we're just looking for a no-brainer. Is it never going to go down? It ain't going down there. And so below 4,200, you want to get closer to the price action, you get some pretty nice juice. Real nice. It's tempting. So, I mean, if you're feeling a little frisky today, 4,150, 4,150, right? But between 4,150 and down here, I wouldn't go much higher than 4,150 because we want no brainers. All right, let's look at everything else. Qs rolled over. It's got, let's look to the left. We got a pivot low right there, popped up off of it. Isn't that amazing? All of you on YouTube and in this room, that have been exposed to the same bullshit I've been exposed to many years ago with the fib lines and trend lines and this line and that line and Gann lines. And day in and day out, I show you, look to the left, and it pops off of there like it's magic. So I hope the bell is ringing. Get rid of all that other crap. Anyway, so we see rejections on the pop up into this minor resistance area, and I suspect this will get defended again, and then we'll see what kind of bounce or the lack thereof that could open up the door to the void below. And Russell, chop, chop, chop. Bottom of the trading range, similar setup there, topping pattern. We go back up into the middle of the range, and so on. Right. There were some nukes involved. Yeah. I don't know about the nuke thing. Who's got the nerve to shoot that off? And that's kind of the game of chicken. Yeah. All right. Bitcoin backing off from the top of the trading range. Still, it hasn't failed completely, but it's top of the trading range. We look to the left. Maybe it's in the, the process of building, a base here. Maybe it's going to the bottom of the range. I don't know. So right now can get a turnaround day over here. I mean, we'll see. Buyers down here, sellers up there. Amazing move. I guess it's got to go to 120. Right, we looked at this yesterday or during the week. Forget about the big tail at the bottom. That is real. But I'm using this for just a guide. Well, let's put it on a monthly. So it's right up there. So it's kind of risky, a whole number there. You think what's going to stop this? But just technically, while it's still acting bullishly, you have to be apprehensive. And now, can it go sideways and chop around at that resistance and potentially go to new all-time highs? And I think, look, if this breaks out above here, what the hell is going to stop it? It was just this peak up there from 2008. So I guess that would be the next obvious destination. And if that's going higher, and so if that's going higher and this starts to drop, That's the stagflation theme, because you have a Fed that's going to raise interest rates. And if these start to drop, the market is saying, maybe you better think twice about doing that, because this economy with inflation and, what's going on, that could be a death blow. Now, how are you going to control inflation? Well, I don't know. They got to pull some rabbit out of their hat. Maybe they have to bite the bullet and still drive up the Fed funds rate and just let things go where they need to go. But if these interest rates begin to fall, that's going to happen because institutions and businesses are going to say, you know what? Things were looking better, and now they're not. This is controlled by a demand for money and a belief about the economy. So if this starts dropping down here, that means that there is a shrinking demand for money, and we have inflation, and you've got the Fed going to raise interest rates. And if this continues to move up and this continues to move down, we're a long ways off. But some months from now or weeks or whatever, we could be talking about recession and a real bear market, not just a correction that was due. Silver, top of the trading range. Gold, hanging, doing well up there at the top of the trading range. Let's put this back on a weekly. And we always look at the transports. And I'm just, I always looked at this for the longest time. So, all right, it's an ETF for the transports. Yes, it is. But it's got 50 stocks in it. 50 stocks, some of them like totally unrelated. Not that they're not transport stocks, but it's amazing how this moves pretty close with this that has 20 stocks. I'm just throwing that out there. Anyway, top of the trading range. We'll see that bottoming tail bar, how long it holds. This can go sideways for a few weeks. That'd be a positive sign amongst all of these signs of uncertainty and whatever, if the transports can hold up. So all yours, Dan.
Good morning. Happy Zero DTE Day. Yeah, so what Greg's talking about, gap in the support, no void and everything, that's why we didn't get too aggressive on swing shorts yesterday, although we both were in agreement. We got a bearish bias and still do. It's just not making the entries very easy. All right, opens here. We have a couple that expire today. Booking is far away. We got a put spread on that, and then we also have another one that we're in hope mode here. Alta, it's the 367.5, so it's over $5 lower, but with the market gap down, we'll see. The 15-minute markets actually have a bullish new low divergence on the 15, made a new low here, and well, this one didn't make a new low. The Qs did. Qs did. So I don't know. We'll chill at the open. Here are a couple of my favorites for bullish gap on earnings. From Avgo, it's a semi, obviously. And look at this, it's sideways, gapping over this red bar, and it has room to go. So if it can take out a 30-minute high, then we're golden. And that's kind of just a starting place for safety. I put it in a chart, and we very well will go through our checklist, and we might find a new setup. And this would be very timely, actually, for next week's MT Live. We're going to be talking about trading day prep and trading the open for day and swing trading. And that's exactly what we're doing, starting with Greg's review, review of opens, review of this, getting a bias. That's what the subject is. So that I like. Veri, another one, very similar. Gapping over a couple days highs here with a void. If it can hold in the first 30 minutes, particularly with the gap down in the market, it looks fantastic. It looks great, both of these. Finally, GPS. GPS 1535. The gap's starting to get a little bigger now. All right. Yeah, see, I'd really like this gap to be down here at 1475. So let's hold off GPS because I do not want to buy a 30-minute high now on GPS. Let me just telegram that real quick. But we'll watch on a pullback. After, oh, A&F, did I get the wrong one? You know what? I had a typo there. A&F earlier was typo. Meant GPS. Hold off. All right, so let me fix that. Don't want them buying. Well, I canceled it anyway, but just for clarity. All right, let's continue with gappers here. STM, bearish gap down, bearish trend, but it's excessive. Gapping down 10%. Disney, they're in the news about coming up with a cheaper little streaming service, but there's no pattern. There's a lot of patterns like this that if they negate the red bars next week and take out the highs, then they look fantastic for longs. Like here's one, for example, GME. We're in this with a put spread also. But if this takes out the week's high, that's a beautiful pattern. It's an inverse head and shoulders with converging 20 and 50. Vizio. All right. I couldn't tell the gap earlier. I see one print down here, but this one would have been a fantastic 30-minute high if it were gapping over the red bar. This one I can't tell. I'm just going to delete you. Marble is down, but it's another one if it happens to take out yesterday's high. But as of now, they're call spread candidates. This isn't a nasty trend, gapping up a little bit, but no pattern. You're gone. ESTC, gap in the resistance, bottoming pattern. I mean, if it were to make a magical turnaround and take out those highs, but I'm going to delete it. Duo earnings had a nice entry over here, but I don't like entering things that extended. Costco, I know some people were talking about naked puts yesterday, the 490s into earnings, gapping down, but you know, the game you play of shorting options into earnings is you're hoping that the gap is significantly less than the expected move. So then you make money on the volatility crush. So if you did sell the 490s with a very high degree of certainty, you should still have an open profit at the market open, provided there were 1 DTEs expiring today. There's our Abgo, Coup. I can't tell where you're gapping. TMCI, sloppy. PBYI, potential bottoming pattern, but mess. Here's another one. If it can take out this red bar, yesterday's high, or preferably Wednesday's high, then this is a continuation pattern with a price void on the weekly. Target 1050.11. NX. All right, NX. I really can't tell where you're gapping, but that's beautiful. That's going on a thumbnail. Volume's a little light, but this gap's over this high, so 10, 15, 60, 30-minute high, I don't know. I'll tell you when I see it. AGL, I can't see the gap. AVAB up, but too extended. XPOF, no pattern in light volume. SG, gapping up to 25. No, that's not a shock enough because it's just gapping the resistance. Swabi, I can't believe Swabi is getting its head hurt, chopped off this bad. This is a Smith and Wesson. I mean, it just shocks me with the companies that have been in business for so long. How can one quarter be so shocking? And look at Ruger, his cousin. So his cousin gapping down, I guess, in sympathy, but what the heck happened with Ruger this last week? Now, I can't believe that it's going up with the military sector. Sure, they're both guns, but that is like day and night. Why would you go out and buy a handgun in America because of Russia? So I just have no idea about that one. All right, GPS, Funko, 2050, gaps too big. Who? All right, so this had earnings, and I know Rita was talking about shorting this. And I said, Rita, this is a fantastic short, as opposed to something like that. I forget the symbol, Duo, as opposed to Duo that's down 3-4 bars already. So that Coup looks great, 30-minute low. Sell setup. We had our, hey, actually, you all need to help me on 0DTE day. So since Coup had earnings, this will be a fantastic call, 0DTE call spread under 5-10-minute low. But you know the problem, the spreads are going to be asinine, I guarantee it, at the open. So after 5 minutes, we'll come back. We were talking about wheat. Wheat being a call spread soon, but I said this thing coming out of a base, you do not want to get in front of a commodity short squeeze. And well, who knows if it's a short squeeze or new buy, but when commodity moves, you better be careful jumping in front of that. But the calls are extremely expensive. So this is on my watch list to short a call spread. Also Russia, I've been watching